Kiwi dollar hit a 6-year high against the yen. The gain was helped by a stronger growth outlook. Now in March, the New Zealand dollar gained more than 5% against the yen as the Reserve Bank of New Zealand began to tighten monetary policy. I'm joined by Sebastien Galy from Société Générale in New York. Sebastien, can you tell us more about the upward trend we are seeing and how growth expectations for monetary stimulus in China also benefited the Kiwi?
Sure. What we have is a combination of positive effects. One is equity markets are performing decently in global risk. This is on essentially the expectations of easing out of a combination of Japan, China, and the Eurozone. And so the outcome of that is the risk is fairly well supported. Then you have basically a fiscal year end in Japan, whereas we should see in the next 2 to 3 months is very heavy outflows out of Japan into high yielders. This includes the Aussie, but also the Kiwi, which is probably gained as a favorite, and as well as flows back into the Eurozone, soft core and periphery. If we think about Kiwi yen, basically they have, of course, a very good economic story to go with it. A typical carry trade in the sense that the underlying story is deteriorating, the growth is accelerating, and of course the RBN that will be particularly unhappy with the trajectory in the Kiwi because it means that it's going for a strong overshoot. And I think with a combination of data and events that we have right now, the probabilities for Kiwi yen to continue to rally. And at one point we will have a severe correction coming out of the Kiwi yen, but that may take a while to happen. The first trigger for a correction might come at a non-farm payroll, but it probably will be a very short-term event. So if we do get, as we expect, a very strong non-farm payroll, that will create a setback into the global carry trade. But since this is really a sign of health of the global economy, particularly at least of the U.S., that will eventually be seen as a positive. So it should be a temporary setback.
And speaking of non-farm payrolls, what sort of number are you expecting to see, and how will this impact the New Zealand dollar against the greenback?
Sure. I mean, what I presume is actually the dollar will initially outperform the Kiwi, just on the basis of the fact that yields are going to move. And we do expect a 285 print basically on non-farm payroll, which is quite considerable. As it happens, over a few minutes and maybe up to half an hour, the second leg will happen, which is people will realize, equities may be under pressure, but actually it's a pretty darn good story. Yields are maybe moving higher, but it is a good story. And so eventually what we'll see is macro traders come back in and pick the bottom of these trades. So it should be a temporary setback, maybe last half an hour, maybe last half a day or so. But I don't think it really is going to shake that carry trade. All it tells you is you shouldn't fund yourself in dollars. You should fund yourself in other alternative currencies. One of them is the yen. Another one, which is probably going to rise courtesy of the ECB, is going to be the Swiss franc as a funding currency. And so it's just a matter of getting the right short in an environment which is still supportive for risk. New
Zealand posted a record trade surplus in February. Now, do you think we will continue to see the trade balance hitting record levels?
I guess most of the inputs which were needed for construction, probably the bulk of it has come in. The question will probably depend on the energy side, if energy stays stable or not. And on the import side, probably, I guess that should be a fairly steady pressure. On the export side, they are exporting record amounts to China. Milk somehow is the thing, which is slightly surprising, but it really tells you that the middle-income China is doing well. And as China eases, the pressure on that middle-income part of China is actually going to also ease. This is on the frightened part. And pollution is not improving seemingly in China. It's probably going the wrong way. And that means the premium which is paid in much of Asia, particularly in China and the region, for high-quality products coming out of the West, if you want to consider it that way, is only going to increase. So that part of the business for New Zealand is going to be very good.
Sebastien, thank you very much. Well, viewers, do stay tuned as we have plenty more economic and FX updates heading your way. Goodbye for now.